So as of today, and today is February 28th, the market already fell about 17%. If you're looking at the S&P 500, off of the high in about 2 weeks, fell roughly 17%. And what you would expect is that the market's not going to go down forever. You would expect to see some kind of a relief rally. So do I expect to see relief rallies at this point? Sure, right? But so far on the way down, we've seen relief rallies intraday and then they just get sold off and sold off and sold off. At some point, we're going to see more of a relief rally. But does that take the market back into bull market mode? I think that that's the bigger question here. So how do we assess that, right? I think that's the real question. How do we know when the market is going to start to rally and recover? Well, I think a couple of things have to happen first. One, stocks need to start setting up. So, when we think of the stock market, it's not a stock market, but it's a market of stocks. So think of the stocks within the market. If you're tracking the stocks that are leading the market, like high quality stocks, and you have this watch list and you're just focused on great stocks that have extraordinary earnings and sales and things like that, and you have this narrow focused list, look at that list, because presumably you're looking at the best stocks in the market and see what are they doing. Are they starting to consolidate? Did they find a bottom? Are they starting to form constructive patterns that they could potentially emerge from? Or are they still kind of choppy all over the place? If they're choppy and all over the place, then whether the market or the indexes look like they're bottoming or not, it's going to be short-lived. And it's not going to be a rally that you're going to participate in. But if you are seeing stocks setting up that are the type of stocks that you want to trade, and they're starting to become plentiful, well, that's going to give you the fuel for that uptrend. And I've seen it time and time and time again. Another thing that you're going to want to look for too, take a look at the number of stocks making new highs versus the number of stocks making new lows on the New York Stock Exchange. We went from having triple digits consistently as late as a week and a half, 2 weeks ago, to those quickly dying off and new lows rapidly expanding. When the market is ready to start to turn around, you'll start to see the number of new lows start to dry up, the number of new highs start to expand. That typically happens before major turning points. Now, because we've seen so much volatility, it's going to take more than just that one gauge, new highs versus new lows, to turn the market. And you never want to just look at one thing. What you would want to do too is to start to look at the major indexes. Look at all 5 of them, right? So look at the S&P 500, look at the NASDAQ, the Russell 2000, look at the New York Stock Exchange, look at the Dow. See what they're doing. See what they're doing across time frames. See what it's doing on monthly charts, on weekly charts, on daily charts. See what those trends are. See if they're starting to consolidate. See if they're pulling into any kind of support levels or support areas, spots where buyers might step in, and see the type of price action around there too. Is it still really erratic? Is it still wide and loose? Is it still all over the place? Or is it starting to become more tight, more controlled? And let that be your guide of when are we going to rebound? When are we going to have a real rebound versus just a relief rally?